Today I want to talk a little bit about rental income. When you're looking to buy an investment property, you're going to be using a conventional loan. The rule is if there's currently a lease in place where there's a tenant currently living in that investment property that you're going to buy, you can use that current lease agreement and use 75% of whatever that lease amount is to go ahead and offset that new proposed mortgage payment. If there's not currently a lease agreement in place, you can do what's called a 1007 rental analysis that will be completed by the appraiser when they go out there to appraise the value of the home. This 1007 rental analysis will give a breakdown of what that projected rental income is for that area. Again, you get to use 75% of whatever that projected number is to offset that new proposed mortgage payment of that investment property, which could help you and will help you be able to qualify for a higher loan amount with your debt to income ratio. Now, when you're vacating a current primary residence and turning it into an investment property, to be able to use rental income from that scenario, you will actually need to have a lease agreement put into place. Then we get to use 75% of that lease agreement to go ahead and offset that mortgage payment. Now, when you're converting a primary residence into an investment property, but you're actually using a VA loan to go ahead and buy a new primary residence, on that current primary home that you own, you actually can do a 1007 rental analysis, or you have the option to be able to just use the average rental income for that area. Again, this is specific for when you're using a VA loan to buy a new primary residence and keeping a current home that you own. You get to use the average rental income, and this can be documented simply as looking at a home buying site like Zillow or Redfin. Whatever that average rental income is, and is customary for that area, and it's easy to be rented, you get to go ahead and use that. So just another added benefit when you're using a VA loan to buy a new primary residence. If you're looking to use rental income on any other home that you currently have owned in the past, if it was purchased prior to a tax year, to be able to use rental income from that property, it's going to need to be on your Schedule E on your personal tax returns. Whatever your calculation is from your Schedule E, that's what you get to use in place of that mortgage payment. I hope this helps, and feel free to reach out to me if you have any questions. Talk to you soon.